everyone, this is Andrew McNair from SWAN-Capital with our December 2014 Educational Economic Update. In this month's video, we're going to be discussing some of the economic events that occurred last month to give you some insight on what they mean for you as an investor. Now, please stay tuned at the end for a required disclosure statement. December was a fickle month for markets that forced investors to weigh positive domestic fundamentals against the fresh worries from abroad. Let's take a look at what happened last month. Falling oil prices caused a lot of market uncertainty because investors are unsure what this could mean for the economy. Since the recent highs in June, oil prices have fallen nearly 50%. Now, while this cheap oil is great for us, American consumers, who have more money in their wallets around the holidays, it's bad news for oil producers abroad like Russia and Saudi Arabia because they depend on these oil revenues to balance their budgets. Now, American producers also need higher oil prices to do more U.S. oil projects. We do not want these low oil prices to destabilize other countries or future production. Now, despite Black Friday weekend being off to a slow start, retailers hope that cheap gas and improving labor market will boost sales. Between November and December, we are projecting to have a growth of 4.1%, which is the biggest increase since 2011. But many stores had to offer very big discounts, which can cut into profit margins. Now, the Commerce Department has also released an updated GDP report with a whopping 5% in the third quarter. This is the fastest rate we've seen since 2003. Now, the question is, how much of the juice from the GDP will be carried into the future quarters? It's really too soon to say, but we hope that cheaper gas and a better job situation will boost the economy in the fourth quarter. Overall, 2014 was a great year for the U.S. economy. As the recovery moved into its fifth year, we finally regained all the jobs lost in the recession, and Americans started to believe in the economy again. Now, looking ahead, it's important to be cautious about markets in the coming weeks. Despite periods of volatility, markets did well in 2014, and a pullback is possible. Fundamentals are solid, and we expect with this positive consumer sentiment and an improving job market to contribute to the gains in 2015. On the other hand, we have weakening global demand, low oil prices, and interest rate hikes could affect the U.S. economy. As always, we recommend focusing on investment strategies and allowing us to keep an eye out on market conditions. Now, I hope you've enjoyed all the economic updates we've provided you through 2014, and we look forward to providing more in 2015. Now, if you have any questions about the video today, please give our office a call at 850-380-9558. That's 850-380-9558. Now, please, if you can, RSVP for our State of the Market address. It's January 19th, and it's a great opportunity for you to learn more about what happened in 2014 and find out what potentially could happen in 2015 in the economy. Hope you enjoyed this video, and we'll see you next time.